Okay, good evening, friends. We will take up, for the purpose of discussion, AS7 construction contracts. So, what is it you consider as in AS7, which is very unique in the case of construction contract? The uniqueness is revenue recognition, expense recognition, presentation in profit and loss account, presentation in balance sheet. These are the four important items that we will take into consideration. So we all know that construction would take a period of, say, more than 1 year. More than 1 year. Even if it were to be less than 1 year, but would spread in 2 or more years or in 2 years. Even if it were to be less than 1 year, the work, but it would get spread in 2 years. How come? In the month of February, we would have taken up the contract. And the contract may run for 6 months. 2 months will fall in one accounting year, 4 months will fall in the next accounting year. Or 5 months will fall in the current period and 1 month will fall in the next period. So do not get the impression that contract should be more than 1 year as to have a challenge in revenue recognition. Previously, we had, prior to this revision made in AS7, completed contract method we were having. What do you mean by completed contract method? The revenue, expenditure, income, everything was done only after the completion of the contract. The contract were to run for 3 years. The revenue for that particular contract, particular work will be recognized 3 years later only. Expenditure 3 years only. Income for the project will be taken up for in 3 years. So what they have done in 3 years, 3 years later they will recognize the income. So therefore, they had a lot of challenges in reporting the income for those 3 years period. You can't only one project, I will report only 3 years later. So if accounting system is not providing a remedy for this sort of challenges, then accounting is a waste. Then they have brought something called as percentage of completion method. What is that? Percentage of completion method. This percentage of completion method can be done using physical measurement, survey method. The other one is formula method. Physical method is you don't require an external consultant. Prima facie you can find out. Prima facie it is possible. On the site itself you can tell that it has happened so much. Survey would mean you require an expert to review. If you find physical and survey method are not there, then formula method will come. What is that formula method? Cost to date divided by cost to date plus estimated cost to complete. So we can put it this way, C to D plus EC to C. So it is based on the amount of expenditure that you have incurred till that moment to the total cost that you expect to incur for the project. If I consider that it is 1 lakh is the total cost, and I spent 30,000, then 30% completion you can take it up. So normally there are two parties involved. In a contract, there will be two parties involved. Person who is awarding the contract, person who is taking up the contract, taking up the work. This person will be referred to as contractee. This person will be taken up as contractor. This AS7 is only from the viewpoint of contractor, and it is not from the viewpoint of the contractee, right? So the contractor will always have the urge to show that he had completed more so that he can raise progressive billings on his customer, that being contractee. What is that he will do? He will have the chances of manipulation. So why should I tell about manipulation? Please understand manipulation in the sense that all are not bad, but always have the urge to show off that they have done more so that billing will be more, collection will be more. Even before I have spent that money, or even if that money were not utilized, I will show that it is utilized. What is that they will be doing? Number one, precautions. Materials bought and not used cannot be taken as cost to date. I cannot take it up in the numerator at all. Am I right? It is bought, not used. So I have to take up for cost to date only when it is used in the project. Then advance money paid to subcontractor is not as a part of cost to date. Advance money paid to subcontractor is not to be taken as part of cost to date. Say on the last day they will issue a check to a subcontractor and show that so much of cost you have incurred. As how materials bought not used is not to be taken as estimated cost to date. Same is the way people will try to project. You have to be very careful. Please exclude that. Those items are not to be taken up as part of cost to date. That should be considered as estimated cost to complete. Correct. Now, revenue, recognized revenue is equal to percentage of completion into contract price on cumulative basis then current year revenue is equal to cumulative revenue at the end of current year minus cumulative revenue at the end of the previous year. Correct? No. If I have completed 75%, and in the previous period when I have completed only 30%, 75 minus 30, 45% during the period I have completed. So current year revenue is like that. Recognized cost is equal to percentage of completion into total cost. That is cost to date plus estimated cost to complete. Current year cost is equal to cumulative cost at the end of current year minus cumulative cost at the end of the previous year. Cumulative cost at the end of the current year minus cumulative cost at the end of the previous year. Profit is equal to recognized revenue minus recognized costs. Current year profit is equal to current year revenue minus current year cost. Correct? Note. If estimated, if cost to date plus estimated cost to complete were to be greater than contract price, then loss will result. Correct? Provide for the additional loss portion only, so that cumulative loss shall not exceed cumulative loss shall not exceed cost to date plus cost to estimated cost to complete the contract minus contract price. Then presentation in the balance sheet. Presentation in the balance sheet. Cost to date add cumulative profit less cumulative loss. Less cash received cumulatively, retention money. These two items are to be deducted. If it is positive, due from customer. If it is negative, due to customer. So contracts are of two types. Contracts are of two types. One is fixed price contract. The other one is cost plus contract. Okay. Then the entire accounting standard is over now. Now we have got to solve problems so that our understanding is strengthened. Now we will take up a problem. Example 1. Percentage of completion method. X Limited commenced a construction contract on 1 for X1. The fixed price contract being 2 lakhs. The company incurred 81,000 for 45% work and received 79,000 as progress payment. The cost incurred in 2-3 was 89,000 to complete the rest of the work. So now we understand that they have started the work by 1 for X1. 2 lakhs being the contract price. The company incurred 81,000 in X1, X2 for 45% work. And they have received 79,000. Against that, the cost incurred for X2, X3 being 89,000. So 81,000 plus 89,000, 170. 81 divided by 117 percentage comes to 47 percentage. But all of you please remember, when percentage is given in the problem, you follow whatever percentage that is given in the problem. If percentage is not given, where you have got to find out the formula method. Correct? If they call donkey as horse, accept that as horse only. Don't do that audit work, sir. It is looking like donkey and all that. You should not tell. Therefore, when they are given 45%, apply 45% only. It may be a physical measurement or it may be survey method. We do not know. Example number 1. For year number 1, revenue recognized is 45% of 2 lakhs 90,000. Correct? And as far as cost is concerned, 45% into how much they have incurred? 81,000 they have incurred. So 81,000 they have incurred, which they themselves are given, which is representing 45%. Representing 45%. Supposing that information is not given, that 81,000 is representing, then what is that we would have done? Alternatively, what we would have done is we would have applied 45% into 81,000 plus 89,000. That is the way we would have done. But fortunately, we will not do it in this particular case because this 81,000 is representing 45%. They themselves are given. That is what I am telling you. So donkey, they have called it out as horse. Okay, we will accept. Profit is 9,000. Okay, that's all. The next period, year number 2. So where you have got to take up revenue 100% over 2 lakhs 90,000. Then for the year For the year 2, it is going to be lakh and 10,000. Correct? Cost 1,70,000. How come? 81,000 plus 89,000. In the previous period, 81,000 was incurred. So 89,000 incurred here. Profit 30,000 and here 9,000. So therefore it is 21,000. That is what they would have done. Correct? Are you understanding? Now this is profit and loss account presentation. This is profit and loss account presentation. How is this in balance sheet we would have done? Cost to date 81,000. Profit recognized 9,000. 90,000. Cash received 79,000. So 11,000 due from customer. Year number 2, 2 lakhs. Profit is 30,000. Sorry, cost to date is 1 lakh 70,000. 2 lakhs. How much they have collected, they have not provided. Assuming that they have collected 1 lakh and 80,000. Assume. So 20,000 is the balancing figure. They have collected in full. Correct. So that is the way that particular question got handled. So likewise, you please just complete the rest. In case of any difficult moments, please let me know. We will solve them in the class. Okay. Thank you.